Today's financial market update. The most important market insights you need to know. Market sentiment is bullish. Market is performing well across major indices. Index performance: S&P 500 at plus 0.71%, Dow Jones at plus 0.46%, NASDAQ at plus 0.2%, Russell 2000 at plus 0.96%. The stock market sentiment remains optimistic, buoyed by robust revenue growth across various sectors. The strong performance of MOBOBEX indicates that innovation and strategic advancements in technology can lead to substantial investor returns. Consider investing in innovative tech firms like MOBEX, as their growth trajectory suggests potential for significant returns. Rising tensions in the Middle East have caused crude oil prices to increase by 15% over the past month. Investors should recognize that prolonged inflation may lead to increased operational costs for businesses, affecting profit margins. Consider allocating funds towards energy stocks, particularly those involved in oil and gas production, as they could benefit from rising prices. Weyco Group reported a significant decline in net sales and earnings driven by reduced demand and tariff impacts. The mixed earnings landscape suggests underlying vulnerabilities in the materials and automotive sectors, prompting investors to reconsider their positions. Consider investing in companies like Archer Daniels Midland that may show potential for recovery amid broader market uncertainties. Off-price retailers Ross and TJX are set to open a total of 256 new stores amid rising demand from cost-conscious consumers. The expansion of off-price retailers indicates that consumers are prioritizing value, suggesting a potential shift in spending habits towards budget-friendly options. Consider investing in off-price retail stocks, as their expansion suggests a strong market position amidst changing consumer preferences for affordability. The effective federal funds rate fell from 4.33% in July 2025 to 3.64% in February 2026. A decrease in the federal funds rate typically indicates a more favorable environment for economic growth, signaling potential opportunities for investors. Consider reallocating assets towards equities, particularly in sectors that benefit from increased consumer spending, such as technology and consumer discretionary. China's factory activity dropped significantly in February, indicating a slowdown in industrial output following the holiday halt. The decline in China's factory activity may foreshadow broader economic challenges, potentially affecting global GDP growth and industrial production. Consider diversifying investments in energy sector stocks, as they may experience volatility but also present opportunities amidst rising crude futures. Crude oil prices have surged by 12%, significantly impacting airline profitability, as fuel costs account for 20 to 25% of their operational expenses. The recent spike in oil prices indicates increased operational costs for airlines, which may lead to higher ticket prices and decreased travel demand. Consider shorting airline stocks in the near term, as rising fuel costs may significantly dent their profit margins and stock valuations. Wall Street is expected to open higher as oil prices have recently declined by 3% from last week's highs. The decline in oil prices may temporarily ease consumer spending pressures, creating a more favorable environment for stock market recovery. Consider diversifying portfolios with energy stocks, particularly those that may benefit from rising oil prices in a volatile market. Crude oil prices surged by 12% due to escalating geopolitical tensions, significantly impacting the airline industry. The spike in oil prices signals potential long-term challenges for airlines, affecting their profitability and pricing strategies in a competitive environment. Consider investing in energy sector stocks as higher oil prices may bolster the profitability of oil and gas companies amid rising demand. Crude oil prices have surged by 12%, significantly increasing operational costs for airlines that rely heavily on fuel. The spike in oil prices may force airlines to raise ticket prices, which could dampen consumer demand for leisure travel. Investors should monitor airline stocks closely as rising fuel costs may create short-term volatility and buying opportunities. China's manufacturing sector faced a setback in February 2023 with significant declines in factory activity due to extended holidays. Investors should view the slowdown in manufacturing as a warning sign, indicating potential declines in overall economic performance and reduced consumer confidence. Consider diversifying investments away from sectors heavily reliant on Chinese manufacturing, focusing instead on more resilient industries or regions. Global crude oil prices have surged by approximately 10% over the last month due to supply chain disruptions. Higher energy prices are likely to contribute to rising inflation, which could prompt central banks to adjust interest rates upward. Consider diversifying fixed income portfolios with inflation-protected securities, TIPS, to safeguard against rising inflationary pressures. Grassroots movements in the U.S. are increasingly opposing data centers, which are linked to rising utility bills for residents. The opposition to data centers may indicate a shift in local policy priorities, potentially impacting future developments and utility costs in affected areas. Consider investing in utility companies that may benefit from increased demand as data center opposition rises and local infrastructure adjusts. Blackstone's flagship private credit fund has experienced record redemptions, indicating heightened investor anxiety about market stability. The record redemptions from major funds like Blackstone suggest a shift in investor sentiment, signaling potential liquidity concerns in the private equity market. Consider reallocating funds into resilient sectors, such as off-price retail, which is demonstrating sales growth despite broader economic pressures. HP Inc. is transitioning to an AI PC, gaming, and high-dividend cash flow investment model to leverage the AI PC refresh cycle. HP's strategic pivot signals confidence in AI's market potential, indicating a solid opportunity for growth in consumer technology investments. Consider investing in HP Inc. as it focuses on AI-driven products, potentially leading to increased shareholder returns and market share. Recent data shows that U.S. Bitcoin investments have surged, while international markets are witnessing profit-taking actions. The growing focus on Bitcoin in the U.S. signals a potential risk of overexposure to a single asset, prompting caution among investors. Consider diversifying your portfolio by exploring altcoins that may offer growth potential as Bitcoin dominance fluctuates. Oil prices have surged to over $90 per barrel due to ongoing conflicts in the Middle East. The sustained high oil prices indicate heightened risk in the energy sector, prompting investors to reassess portfolios focused on fossil fuels. Consider reallocating funds into renewable energy stocks or ETFs that focus on solar, wind, and battery technology to capitalize on growing demand. Thank you for watching FERPA, your financial Sherpa.